This is the Skin in the Game VC podcast, hosted by Tom Wallace, entrepreneur turned venture capitalist and the managing partner at Florida Funders, along with Saxon Baum, general partner and head of investor relations at Florida Funders. You'll learn from the best about investing in early stage tech companies, so you too can gain the confidence and find the tools that help you succeed as an angel investor. Are you ready to get some skin in the game?
All right, I hope everybody's doing well out there. My name is Saxon Baum, and I'm a partner at Florida Funders. Welcome to the Skin in the Game pod. Unfortunately, my co-host and partner in crime is not here today, but it's okay. We will be all right because we have an amazing guest that I'm so excited to introduce. We met about a year ago at one of our mutual friends events in Dallas for the Anchor Capital Summit. But today we have Ann Berry, the founder and general partner of Threadneedle. Ann, how are you doing?
I'm good, and I can't believe it's already been nearly a year. I feel like 2024 has just flown by. There's been so much going on, which I'm sure we're going to dig into, but I'm glad to be with you. Thanks for having me on.
Of course. And if you can't tell, Ann is an absolute professional on camera, truly a professional on camera, and we'll get into that. But Ann, tell us a little bit about yourself, how you ended up in the seat that you're in today, and a little bit about your background would be awesome to start.
Well, we can start on the venture capital side, Saxon, because my path to venture was in some ways really conventional and in some ways just really off the beaten track. So if you go back in time, I started my career in really traditional Wall Street. I was at Goldman Sachs for 12 years, primarily focusing on doing large leverage buyouts across lots of industries, industrials, consumer, financial. I left that to go and join an old boss in starting a private equity firm. So I was a partner there. And then it was in 2019 that my journey sort of took an unexpected turn. I became the CEO of one of our portfolio companies in the hospitality space. I spent most of my time in Vegas to run it, 6,000 people, 32 locations, industrial services, big 100,000 square foot locations. And I'm giving you this context because I can already see the wheels turning, like, what's that got to do with venture? But I'll explain. So I was running this business and then COVID hit. No one told me that was going to happen and shut down 80% of my client base. And I was literally there in Vegas in the eye of the storm. You may remember COVID was terrible for everybody. You're in Florida. Nevada was, I think, in a similar position. Two of the biggest hospitality states, right? These are like central, totally shut down.
Overnight.
And Nevada was a little slower to rev back up than Florida was. But I was there, Saxon, really seeing heartbreaking poverty, heartbreaking unemployment, how difficult it was for people to get their unemployment coverage. And anyway, I led that business through to sort of the other side. So that's now to the sort of end of 2020 and stayed on the board for another 2 years. And at that point, I'd really fallen in love with operating. I'd fallen in love with being CEO. I'd fallen in love from going from only deploying capital to actually getting my hands dirty and doing the doing. So I joined a media company in a hybrid role, both investing and operating. It was a business co-founded by Jimmy Kimmel, which was sort of an entree into really the world of content creation. And it was there, and I'm really getting to the heart of the VC part, it was there that I could see how all the training I'd had investing, the training I'd had in doing and operating lent itself to resonating to founders in particular. And it was there that I learned the power of content and of storytelling to help drive the adoption of whether it was new technologies, whether it was trying out new consumer products. And I really fell in love with this idea that content and investing and founding and entrepreneurship could really belong together. And I'd never been exposed to that, Saxon, in my days on Wall Street.
It's a whole nother world once you get into our game. When you're working with venture and operating and entrepreneurship, that is a different world than what you were used to back in New York City.
It was definitely a different world from what I was used to, but I've come to learn over the last couple of years that the lessons I had learned in the first chapter of my life and then the lessons I learned in the second chapter as an operator really informed how I look at the world in this third chapter of my life, which is in venture capital. And the way I got into that after I left the media company, I needed to spend some time in London. I hope you can hear from the accent because I'm hanging on to it for dear life. But I grew up in the UK and I didn't get to see my family at all during COVID. I was so busy running that business. I really needed to have the flexibility to go back and see my family, which I'm very blessed to have. They're all over there. And in the process of having a more flexible schedule and trying to figure out where I'd go next. Alexis Ohanian, who's a co-founder of Reddit.
Who's been on the pod, by the way.
He's been on the pod, and he's 776, and he's based in Florida. So let's big shout out there, full circle. I'd met him, and of course, anyone who's met Alexis is super impressed with what he's doing. And I think he'd sort of seen that I had this passion for building something, this passion for doing something that could get really big, understanding the content. I used to joke I was his warm-up act on CNBC, because there were times I'd go on and talk about what's going on in the markets, and Alexis would literally be the next guest on these CNBC shows talking about what was going on in tech. And we got together and he said, look, Anne, 776 has something called the Titans program. There's a certain amount of capital in our current fund that we've carved out for folks who understand how content and investing go together. And like, he had amazing names. He had like Giannis was one of his Titans. And I said, Alexis, obviously I'm not remotely in that realm. And he said, no, but I've looked at who follows you. And if I look on X, or I think it was still Twitter at the time, the business media folks, the business journalists actually do cover you. And so you may not have yet 1 million followers, but the ones who are engaging with you are really expert in the world of business media coverage.
It's the right people following you to build that network.
And to get ideas out there. And so he very generously made me, I think his last Titan, certainly I'm 5'2", I'm definitely like the smallest Titan, I'm sure, physically in that lineup. So it gave me this capital. And that was the start of Threadneedle. Had already had a strategic arm. I was already doing a lot of advisory work for CEOs and boards. I was investing my own capital. But now 776, at the guidance of Alexis, generously gave me some capital to invest in early
So was this an investment into Threadneedle, or was this sort of like a scout investment like Sequoia would do?
More like the latter. And so a standalone vehicle, which I had the option to scale or the option to just keep, as a discretionary single LP pool. And the thing that got me really excited about that, Saxon, to go back to the comment that you were making about how the first chapter of my life was just so different.
Yeah.
Here's where I started to get really excited. I realized that a lot of the companies that I'd been investing in or on the board of or I'd been running, particularly in the industrial space, particularly in the business services space, had all the benefits of scale, being super free cash flow positive, often having really strong positions entrenched with their clients, but where they were really falling behind was their adoption of new technology. And the more I saw new technology out there, the more I saw new technology and software platforms working with startups or growth stage businesses, the more I thought, gosh, how about if I could try and use my network to act as a bridge to get some of these new young technologies, which I can then invest in, backed by 776, and open the doors to get them to win clients in the more mature world that comes out of my old life. And so that's where I've been focusing my efforts as a venture capitalist, Saxon. It's bringing new technologies with the potential to find their way into sort of clunky, older, but very, very, very important industries, because they're still the vast majority of US GDP.
It's still where the majority of the money is, which is interesting. I want to double click on that.
Yeah.
A lot of investors are reluctant to go into antiquated industries, specifically in technology, because it's tough sales cycles.
Yep.
It's hard to get through to the buyer, all these things that you constantly hear. It's easy just to sell to high growth B2B technology companies when you are a B2B technology company. So for example, a prop tech company, we're always very reluctant to get involved with because we know how hard it is to move inside of real estate. But it seems like you're sort of, as you used, playing this bridge between the two. Talk a little bit about the adoption of technology inside of antiquated industries and maybe just some examples of what you've seen really kind of turn that fire hose on and some of the success that you've seen over the last few years.
Yeah, let me give you 3 different examples of portfolio companies that are in the portfolio that's backed by 776. So let me start with one where adoption is on fire. And that is in the good old-fashioned hair salon industry. Massive industry and really fragmented. If you think about where you get your hair colored, for the most part, it's at a mom and pop, right? It's probably not at a chain. We've got a couple of chains in the US. You've got the likes of Supercuts. But for the most part, it's a really boutique cottage industry still. And I invested in a business called Yuv, that's YUV. And the founder, Francisco, is unbelievable. He started a company called eSalon, which is personalized hair color. It was a D2C business, and he and his founders sold the company to Henkel a couple of years ago. And I'd met him, and there's a story here about relationships in your network and fostering relationships. I'd met him in 2018, And at the time, I, in my private equity role, had partnered with Frederick Fekkai, who's like the GOAT. He's like the OG of luxury hair care. And I partnered with Frederick, who was buying his brand back. And through that, I'd met Francisco, who at the time was still running eSalon. eSalon sells to Henkel, amazing exit. Fast forward, I get a call from Francisco. He's like, Anne, post-COVID, my family and I, we're moving to London. We've decided we want to take the kids on an adventure. We're going to go live somewhere different. Give us all your London racks. And I said, well, what are you going to do? He said, well, I've got an idea for a new company. And I'm going to set it up while I'm in London. And his idea for a new company was Youth, which is catering to the professional haircare space, to the salon industry. And it's this beautiful piece of hardware that does customized color for clients.
Interesting. I thought you were going to say it was a software play, some sort of POS or something like that, hardware play.
Well, it's both. It's razor blade. So the idea is that you, Saxon, could go into a hair salon, and if there's the Youth machine there, gets all the data around what's your optimal hair color, and then the machine, which is on site and it's beautiful, it's almost like Nespresso sized and shaped, will then literally mix it and formulate it, and out comes the hair color. And then your stylist can go in, and rather than spending all their time trying to figure out the right color for you, the technology, the software has figured it out. The hardware has literally mixed it, and there you are having the service delivered to you in your seat. It's brilliant.
It's unbelievable.
Brilliant. It's unbelievable. And I love that it's razor blade. I usually am nervous about hardware businesses, but in this case, you can really see how these come together. The software is the intelligence behind it. So that's an example where the wait list for this is off the charts. Because the beauty industry, the salon industry, think about that audience, right? Personalization is the name of the game in beauty. It has
100%.
Here's now where it's getting tangible. You've got salon owners, they're entrepreneurs, right? There is no, the salon I go to here, I live in Soho. The lady who runs that business, shout out to her, is one of the best business people I know. She's looking for margin. She's looking for new technology.
She's looking for a differentiator, and this is how you get it.
And productivity. All right.
Yeah.
And the service, if you get this right, because you can get human error down, there's still art, it's not pure science. But that's one where the adoption, Saxon, this to me is a fantastic adoption story. So that's number one. On the other end of the spectrum, I mean, I'll give you one in the middle to finish. At the other end of the spectrum, I just invested in a business called Airship. Great founder, Craig. Really just the energy. You know, you see this in founders you back, the energy, the hustle.
Of course. It's my number one thing that I look for, energy and passion.
Backing the jockey, right? And Craig had also come out of Wall Street. I got introduced to him almost by accident. This is a crazy story. Again, you never know where you're going to find your next investment opportunity, right? A great friend of mine is a woman called Abby Falick. She started something called Global Citizen Year in the nonprofit world. She's just started flight school. She pinged me randomly. She said, Anne, she's part of the Emerson Collective, which was the entity founded by Lorene Powell Jobs to try and get fabulous, socially motivated founders together. She was in New York. She said, come to this event on the High Line. So I go and I run in to a woman I went to grad school with. And she's got her own fund. She's a solo GP, so you'll understand her story too. Just got chatting. She said, gosh, you know, given your background in business services, so remember back in my private equity role, back as a CEO, that's what I've been doing. I've met this amazing founder. He's got this company called Airship. And what they're doing is providing software solutions like a mini service Titan, which just went public. You may have seen that. Actually went public yesterday. Which is helping independent contractors, especially in the HVAC space, as they go into your home, Saxon, they go into my home because we call them out and say, help us figure out how to fix something or, you know, kit out my new property. It's a software to help them do that much, much more effectively. And the reason I ended up investing in that one is the jockey, is Craig's a fantastic founder, but also because in my private equity life, I had seen that private equity increasingly wanted to find these businesses in the HVAC, the plumbing space, where they could see this huge generation of founders and operators wanting to retire, where their kids didn't necessarily want to take over the business. And so private equity has been going in, sometimes quietly, sometimes with more fanfare, rolling up this industry. And I said to Craig,
which has been a huge private equity business model over the last few years. I mean, it's all these roll-ups that are happening, whether it's surgery centers, whether it's HVAC pool companies in the state of Florida. I mean, these are things that are happening daily. We're seeing these mom and pops are getting taken out and just building these conglomerates.
Exactly. And the thing is, to go back to the point you made earlier about the sales cycle, Historically, if you're a new technology trying to break into, call it a dinosaur industry, the sales cycle was really long because the adoption was slow, because you had to go to lots of individuals, right, in those kinds of industries to try and make your case. Huge strain on your sales team, huge strain on your sales bandwidth. Now, if you're owned by a private equity firm, if you can get to the private equity owner, and private equity as an industry is really looking hard at how to get AI, how to get technology into their portfolio companies, now you've got an entry point that can touch a lot more potential clients in one fell swoop.
Yeah, you've got that channel set up right there. I mean, we're seeing that too with some of our companies on the B2B side. They're using PE and VC as the channel because ultimately they're going to be the buyers. To your point, though, these antiquated companies that are now private equity-backed companies are more willing to adopt technology because they know they're rolling equity as an owner. They're going to make more money on the way out if they can enhance what they're doing via technology.
That's right. And the generation now that's coming up to be the next
Good point.
CEOs of these businesses.
Yep. And that's what they grew up with. Yeah, absolutely.
They're more digital native. Now, I think that the challenge here is I'm not a believer in technology for technology's sake. Sometimes good enough is just fine, right? And you've got to sort of pick your spots. But so when Craig and Airship came to me, Craig said, look, Ant, your network is private equity. Would you help me be able to reach these owners? I said, yes. You just tell me when. And I understood the end market because I spent all these years investing behind it. So anyway, so that's where there is historically slower adoption. I think it will change. And I think it will change because the ownership structure will change because there's a generational transfer of ownership. The one that's kind of in the middle, and then I'll pause because I'm sure there's lots we want to unpack, is a business called Reality Defender. Now, Reality Defender was incubated at Y Combinator. Eric Schmidt's family office was one of the early investors. And Ben Coleman, the CEO and founder, has all the attributes you've described. He's got a successful exit or two behind him. I worked at Goldman Sachs, I mentioned, for 12 years. He was a fellow alum. We sort of found each other, knowing we had all these people in common. I think he'd seen me on TV. We'll go back to the content point. And I was talking about cybersecurity. We met, his office, it turned out, was close to where I live. We knew all these people in common. And he asked if I'd become an advisor to help him think about getting share of mind. Because one of the things that's also an obstacle for young companies, Saxon, yes, there's the appetite for clients to take on new technology. It's just getting known. It's just getting heard about. It's getting your brand seen in what's a really noisy space. And he said, look,
an expensive space to be seen as well at this point. I mean, we know that. Advertising is crazy expensive online, especially with the big boys these days.
You're exactly right. And so he said, can you help me think about earned media opportunities, just given your background? And so I became an advisor. And then when, 776 gave me the opportunity to actually invest capital, Reality Defender was raising. And so they gave me an allocation. Quite frankly, I was otherwise too small for them. But because I built this relationship, because they could see the value I could add, and we should talk about adding value as an investor, they were willing to take a check for me, which I really appreciated. Now, Reality Defender is a deepfake detection company. It's using AI to identify and mitigate AI risks. Now, I invested before the election had a moment in time where everyone was concerned about deepfakes. Now, we've heard a lot about deepfakes now in politics, where you can get nefarious foreign influencers trying to infuse deepfakes into whether it's TikTok or to other parts of American digital social life. There's also been celebrities who suffered from deepfakes that have portrayed them in lights, that are pornographic or otherwise, that are not consistent with the brands.
Well, there was the big Taylor Swift issue. That came.
That's exactly right.
Yep.
And so when Ben came to me and said, "What do you think of our business?" I said, "I completely understand the problem you're trying to solve. My question for you is, what is the adoption going to be like, particularly for big corporations who are so protective of their brand and their cybersecurity ecosystem?" And he had a real point of view. Now, that is one where, Ben, naturally, the sales cycle tends to be longer, but there's never been a moment in time where it's been more urgent. And it's really interesting, Saxon. There is someone I think you should have as a guest, actually. George Barnes, who was the former deputy director of the NSA. And he's now the partner in charge of cyber at Red Cell Ventures. I asked him the question recently. I was interviewing him on behalf of Morning Brew, which we can talk about. I had just come back from Dubai. I had just come back from Singapore, Saxon. And I said, George, I'm seeing nation states, governments making a really conscious effort to get government agencies to use the technology of startups so we can help those technologies grow in our countries. Is the United States doing the same thing? And George's answer was, well, we're getting there. We're getting there. We're on the path, but we're not necessarily there in quite the same way yet. And Reality Defender to me is the kind of company which lends itself to, if the US has a policy stance to try and give these younger technologies a shot, I think Reality Defender is really well positioned. And they've signed up contracts with the likes of Deloitte, like some really big blue chip companies.
Some big multinationals.
But it took them time.
And does this software does it sit on the back end of these companies and it sort of validates whether or not something is real via what's coming in from a content standpoint? How does that work?
Yeah, can you imagine, for example, if you are telebanking and you dial in, you call up your bank and there's a voice recognition component, you want to make sure, and this is awful. I was talking to my grandmother, actually. She's definitely been getting fake calls.
Heard these stories for days.
Awful. And I've said to her, whatever you do, say nothing. Say nothing. Because if they record your voice, right, and then they can find out who you bank with, they can literally deep fake your voice to get access to your telebanking services. And it's actually awful. There's the elder generation, there's like predatory behavior going on, and it's really hard. So imagine now you've got a Reality Defender that sits there inside the banking client and is listening to that call coming in to determine, is it really my grandmother? Is a deep fake of her voice, right? Through digital pattern recognition. That's that is amazing in terms of security services, but it's a longer sales cycle. You can imagine, I think, particularly on things like cyber, where you've got privacy issues, where I think but when reality's gotten there, man, has it gotten there, but it's taken time, it's taken patience.
Well, it's interesting too, because the three examples that you gave, that one specifically, that's a need, not a want, right? And typically these more antiquated companies and antiquated industries are reactive, not proactive. So you think about some of the hacks that happened earlier this year with MGM, if they were more proactive with their cybersecurity poise and stance, that probably would not have happened. So it's interesting because you also have this decision on whether to buy and when to buy. And sometimes it's a little bit too late. But with this type of product, I mean, companies should be all over this. I'm assuming it's not, for a multinational company, it's not something that would be huge on their balance sheet in terms of budget. These are things that should be tested and should be being used. So it's really interesting to hear those three very different examples, but all are being adopted, it sounds like, pretty effectively via their own industries.
Well, I think for something like Cybersecurity, and I'd love to know what you've been seeing in this, I think if you're a big company, and I'm sympathetic to this because I'm on the boards of big businesses, right? It's where, as a decision maker at the buyer, at the enterprise, do you want to take a risk on a brand no one's heard of internally, right? Do you go to your CEO and say, try this startup technology, or your board or your audit committee or your risk committee, or say, try this startup, it's got great technology, but you always know the first question your boss is going to ask you, who else is using it?
Always.
Right? It's like when we're investing and we annoy founders by saying, who else
is in?
Right? So we do it too. It's human nature. You try to mitigate risk by not being the first. And I think when something is high stakes as the security of your system and your IT functionality, I think that bar is even higher. And so I think...
Yeah, not even a question.
Yeah.
I mean, what I've seen over the years is, first off, you've heard the phrase, obviously, you never get fired by buying IBM. That's something Tom, our managing partner, always says, right? But when you think about emerging technologies, what we've seen, the most effective companies selling into these antiquated industries, and specifically selling into big enterprise, is they'll go into a specific piece or part of the business, test it in that, call it silo. And if it works there, and then the individual that's the buyer on the other side can prove to the rest of the company, prove to the CEO, hey, this is something that we should be doing. Look what it did over here on our marketing function. That's maybe a way that companies can get in a little bit easier, test without trying to go and boil the ocean right up front. And so we've seen that over the years. If you get in and you can be effective in a smaller part, then you just upsell and that contract is, tenfold the next year.
That's actually such a great point. There's another company I invested in, again, in this pocket called Vodi, and it was founded by this fabulous founder, Stephanie Horbaczewski. She'd founded a phenomenal business, great exit to RTL. She founded Style Hall. And what she has been doing at Vodi is working with e-commerce clients to literally get them to clean up their data. It's like, guys, Saxon and Anne are going on Google and they type in something in search. They expect a certain quality of search to come back. No duplicates, right? Relevance ranking. Why is it if you go onto, pick your e-commerce site, when you search for a product and certain attributes, you don't get that same quality of search results? And she's been working, and when she first invested, so I invested very early. And to your point, actually, she very smartly said to the potential investors, here's why I'm raising this money. Here's my use of funds. It's to fund pilots at a couple of really key potential clients so I can prove to them inside their walls in a smaller way what they can do. So then folks can sell it internally and we get some virality internally. And that's how we go land these enterprise accounts. So to your point, I've actually seen exactly what you've said being held up as the reason for a round being raised with real specificity.
Yeah, no, it's really interesting. So if you look at your career, Ann, and I don't want to put you on the spot here, but is it you had to pick, is it Wall Street, is it private equity, is it venture, or is it operating? I mean, which one is it? Or can you do them all at the same time? You tell me.
I have been, and I'm still doing them all at the same time. And at the moment, I'm in the middle of a really exciting chapter right now. It's a fairly new one since you and I saw each other, actually, Zach. So I'm catching you up and catching everyone up.
Yeah, no, this is perfect. I'm getting the update on your life with our audience.
I starting in about 2017, I sort of fell into doing commentary on live TV news. So CNBC and Bloomberg and the BBC and Fox Business and Yahoo and others, talking about what was going on in the markets, public and private, because they're so closely related. People always talk about private, public equities, what's going on. And the pace when you watch TV was almost conducive to a kind of hysteria around the day's trading activity. And sort of my pitch has always been, well, look at what's going on in the private markets. They're super closely related for trends, right? They're super closely related in terms of valuation expectations. And so I sort of gone into that. And earlier this year, I started talking to the team at Morning Brew. And I'm sure a lot of your audience is familiar with Morning Brew.
Yeah, I'm sure most. If they're not, I mean, Morning Brew is an amazing daily news, finance, business, what's going on in the world. Amazing. If you haven't checked it out, go and check it out. Absolutely. Back to you, Ann, sorry.
There's a newsletter. There's actually a couple of newsletters. It started life as one particular newsletter, Morning Brew Daily. There's now a podcast or a vodcast, which I've guested on, which is hosted by Neil and Toby. They're fantastic. And it really breaks down the day's news, not necessarily public equities, but it breaks down the day's news in a fun, accessible way without losing the integrity of the quality of the substance behind it, which is a really difficult needle to thread. So Morning Brew said, look, we're doing more in markets. We've now got a newsletter that explicitly talks about the public markets. It's called Brew Markets. Would you lend your video skills to helping us build out, the video side of it and the podcast side of it? I'm like, yeah, absolutely. This is really exciting. And the reason I pick on that, Saxon, it goes full circle. There's a reason you have a podcast, right? There is value to your podcast. Not
absolutely.
To your listeners, but to your founders, to the investors you partner with. Conversations around what we're doing are really, really valuable. And I love the idea of there being conversations around public markets and how it ties into different business stories and ideas. And I think this is a really exciting time for the public markets. And here's why. The SPAC movement, as much of a disappointment as it ultimately turned out to be, what I think the SPAC movement did at a moment in time was allow companies like the ones you've invested in at the earlier stage, I've invested in, to reach the public mind in a completely new and different way. Because suddenly these stories of growth stories of technology going out to market earlier than perhaps they would have done otherwise, I think those stories were suddenly reaching people in a different way, especially as a lot of these companies were the kinds of ones that we as consumers were really familiar with. So I thought that was really exciting. And so building this markets franchise at Morning Brew is as much operational and entrepreneurial, Saxon, as it is in actually filming content. Because you've really got to think about what we do as investors. We listen to a founder and we say, okay, what is the story here? The story of what is the problem, what is the solution, and is this the person to go provide that solution? It's storytelling. The founder's telling you a story. You're deciding, do you believe the story? Is the story credible to you? Does it resonate? Have you heard the story before, right? Is this a story you've never heard before? That storytelling is endemic in everything we touch in the world of finance and in the world of investing.
It's maybe the most important attribute that I look for when talking to a founder. If a founder is a great storyteller, not only can they sell, but they can raise money. If they can tell their story in a succinct way, this is something that I've seen just over the years can explode a business. I mean, it truly comes down to storytelling.
I've been asked a question. Actually, I'm front running this. Actually, on December, you'll hear it on December 31st. But I've been asked a question both by when I was on the Morning Brew Daily Show. But I've been asked this before. What do I read, or which part of my education? People go back to my education was the most valuable for my career. I actually went back to my high school's anniversary event in the spring, and they were raising money for their scholarship fund. And I was a scholarship kid, so they asked if I would talk. And one of the stories I offered up was answering that question. So I think, Saxon, you're going to kick out of this. About 10 years ago, I found out that my English literature teacher from high school had published a young adult novel, which is what she'd always wanted to do. She wanted to write a book and get it published. And I found out about this. I was so happy for her. And I wrote her a letter. And I said, I just want you to know that of all the things I've done that seemed really obvious training for my career in finance, I studied economics in college. I was really good at math, right? I have a business degree, I have an MBA. But if you really break down what has been the best training ever for what I do, it was my English literature classes in high school. Because here's what happened. You get handed a poem, or you get handed a piece of prose, or you get handed a play, which you've never seen before. You've got to understand it. You've got to understand what story you're being told. Then you've got to figure out how you feel about it and think about it and why. And then you've got to articulate why you think or feel those things by breaking down and using examples and quotations from within that piece of literature to make your case. I mean, what happens in your investment committee? You've listened to the story of the founder. You've listened to the story of
You get the facts. You put your own subjective opinion together. You look at everything else that's happening, and you put together your analysis, right? And then you make a decision around that. Yeah. It's very, very similar. It's a great analogy. It's really interesting.
That's it. And now when I'm writing scripts for Morning Brew, when I'm thinking about what are the stories I want to tell, I have that in my mind all the time. As if you're the viewer, what is it you want to hear from me? Why? Right? Because they're going to have a reaction to you. They're going to have a response. And they better trust what you're saying, by the way. That's important.
So I think something interesting and would be, we heard your journey and you're absolutely kicking ass right now. And it's so exciting to see. How did you make kind of this jump from creating content to being viewed as a content leader, to be on CNBC, to be on Bloomberg? Was it they reached out to you because they saw your content? Did you reach out to them? Did you have some sort of way to cross the chasm? I mean, how did this happen?
Yeah. It was a complete... It was an accident. I'll tell you what happened. So it was early 2017. I was on gardening leave. So I'd left Goldman Sachs and I was taking, it was like mandatory time off. And this often happens when you leave a big investment firm or financial services firm, where you need time before your next job to make sure that all the private information you'd had beforehand basically goes stale, right? It protects proprietary information. And so I had a couple of months off and I was traveling and I saw the BBC, which is the British flagship media entity, which is state-owned, by the way, had put out a call saying, we're looking for more people who are expert in certain areas, and business was one of them. I was like, that's kind of interesting. As a kid, actually, I'd wanted to be a journalist. Long story about why I didn't end up pursuing that. I thought this could be kind of cool. It means I could do my day job. As long as my next employer is fine with me doing this, we'll that'd be great. So I needed to do a demo tape. And so I asked one of my best friends, a woman called Jessica Tarlov, who is the liberal lead talking host on Fox. And at the time, she was a contributor. She wasn't a co-host.
Interesting. That seems like an oxymoron, right?
And she's amazing. She's a very dear friend. And she said, yeah, I'll help you do a demo tape. Absolutely. So we go and we film this demo tape on the iPhone. And I remember pitching at the time, I think the inauguration hadn't yet happened for President Trump's first term. And I was pitching, if there's a new Trump policy and he tweets about it, I can run down to the New York Stock Exchange and I can do a little video. And that was kind of the demo tape pitch I was putting together. So I sent in the demo tape and we get crickets, right? I didn't even get a thank you for submitting your video, nothing. And Jessie, as a friend and as a cheerleader, was so offended by the lack of acknowledgement. She's like, this is ridiculous.
We put so much time into this. I was the producer.
So she connected me with Fox, and I sort of started, I would get up and I would do the 5 a.m. slot on FBN AM. They were very kind to me. I mean, it's when your TV producer doesn't know whether you can get in front of a camera on live news and freeze up, right? They're really taking a bet on
Well,
your
it goes
ability.
back to us selling into the enterprise, right? It's the same situation, just a different scenario.
Different scenario. So that's how it started. And so I would get up in the morning at 3 a.m. and I'd be in studio and I would do the hits, and they were very kind to me, and I did more. And then one of the other networks saw it. So anyway, it snowballed from there. So that's how I fell into it. But the angle was always the fact that I had done the job that I was talking about.
Yeah.
Right. I'm not.
You're credible.
You change in journalist. And when you and I can have a conversation about investing because we both do it. And so our conversation together is very different than if I were to sit down with someone asking me questions where they haven't done it before. And so now, I just interviewed Mark Benioff.
I saw that, by the way, and I want to get into that right after this. Really
absolutely.
Interesting.
Yeah, we should talk about that. So, I interviewed Mark Benioff. He's the founder, CEO of Salesforce for After Earnings, which is one of the show that Morning Brew produces with a partner called Stakeholder Labs. And I've done many, many CEO interviews at this point, and I do think the ability to have that conversation when you've actually been a CEO. I've never been in the league of a Mark Benioff, but I have run a business that's got 6,000 people. I've had heartbreakingly difficult decisions in that seat. I know how lonely it is to be a CEO, because when the buck stops with you, and only you. There's one throat to choke. There's one, and it's the same with the founders I talk to. Right. When I talked to Steph Borbacheski, when I talked to Ben Coleman, when I talked to Alex Buzzle, I invested in Unrivaled, which is it's not tech, but it's a new women's basketball league, which is in your backyard, which is in Miami.
Oh, cool.
So that's launching in January. I do know what it is like to feel that the world is on your shoulders, and you can have the best team in the world. You can have the best co-founder in the world. At the end of the day, if your title is CEO, and there's usually only one, that's it. Your atlas and your world is right here.
Totally. It's interesting too, because myself and all my partners are former founders and entrepreneurs and operators ourselves. And we look at a lot of the reason that founders want to work with us is because that exactly. We've driven that car before, and now although we're not driving the car, we at least can be in the back seat and we can help navigate. And I think that as a venture capitalist, specifically in the earliest stages, that is something that founders really appreciate. We're not traditional finance people. We are traditional down and dirty operators. And when the tough gets going and the going gets tough, we've been there. We know what it's like. And so I think that's why a reason a lot of founders want to work with us. And to your point, we speak that same language, and we know what it's like. We know what it's like to be in those shoes.
It's tough.
So tough. We always say, if you want to be a founder, you have to wake up in the morning, get punched in the face every morning, and then wake up the next morning and get punched in the face again. And your wins are big wins, and your losses are big losses, and you got to be on that roller coaster every day. And I want to get into the lightning round because we are running out of time. You and I could talk for 2 hours. We could continue going forever. But I do want to get in the lightning round. This is something that Tom typically does. So quick few questions, quick answers. First question, stock market has been ripping. 2025, is the market higher or lower than 2024?
I think the market does hit a higher point than it has done in 2024. I think it settles down flat by the end of the year.
Great. Kathy Wood, we had speak at our investor summit last year. She was our keynote speaker. Tom asked her, when does Bitcoin hit 100,000? She said by the end of 24. So clearly she was all over it. In your opinion, what is Bitcoin at the end of 25?
150.
There you go.
I don't own Bitcoin. I've never owned Bitcoin. I caveat that by saying that's perspective on the policy outlook.
Got it. Talked about Mark Benioff. You interviewed him, I think it was last week or 2 weeks ago. If our audience hasn't heard that, go and listen to it. It's such a great interview. But one of the questions you asked him was about the AI bubble. Is it a bubble or is it not? I want to ask you the same question. Is it a bubble? Is it not? In terms of investing first, and then let's do in terms of usage from company standpoint.
That's a great question. Investing first through my VC lens, I do believe that we are and have been in an AI bubble for young businesses. I am a believer that in the world of AI, you need to own massive amounts of proprietary data, and it's about scale. So I do believe that young companies that have been raising large amounts of money at astronomical valuations, claiming to have unique AI proprietary insights, if they don't own their data, I think that is going to come to a sticky end. When it comes to applications, I don't think we're in a bubble. I think we haven't yet seen the full extent to which AI can be applied. And I think the most creative, looking around corners, perhaps looking after clunky industry needs, I think those young companies, I think we haven't even seen yet the full potential. I think that's super exciting.
What about in the public markets around AI?
I think we're going to find out in 2025 if we're in a bubble. We have seen massive amounts of CapEx spend on everything from software companies to the hardware in 2024. There's that expression right now that the danger of not investing is bigger than the danger of over-investing. But 2025, I think by the second half of next year is when the market turns around and goes, show us the money. Where's the productivity? Where's the price that you're taking because of the increased capabilities? Where is the reduction in headcount that because you guys claim to be using AI, right? Where is it? And I think if we are not shown that money as public investors, I think the market's going to go, oh gosh, was that the metaverse all over again?
Yeah, interesting. Like that analogy too. Last question. IPO market has been essentially closed for the last 2.5 years. 2025, is the IPO market wide open, or still somewhat shut?
I think it is wide open. We saw ServiceTitan go out this week. I think it's wide open. However, I think something won't have changed. In the last 22 months, we've seen that a necessary condition to IPO different from before was there needed to be a path to profitability. I don't think that changes. I think that was a shift, a step change that we are now stuck with for a while.
Got it. And this has been amazing. Do me a favor. Give us your socials, way that people can find you. They can follow you. They can follow everything that you're doing.
Yeah, at Ann Berry, ANNBERRY_NYC. It's the same on Insta. It's the same on X. It's the same on YouTube. And I'm also on LinkedIn.
Amazing. And thank you so much. This has really just been an absolute treat for me to talk to you today. And thank you for catching me up and our audience up with your life. Thank you as an audience, as always, for listening. If you loved today's episode, make sure to subscribe on YouTube, follow us on Instagram or X, and have an amazing holiday season because we're only about 2 weeks away from the holidays. And thanks again.
Thanks. See you in Florida.
Thanks for spending your time with Skin in the Game VC today. If you want to learn more about investing in early-stage tech like a venture capitalist, be sure to visit the Florida Funders website at floridafunders.com. Join our angel network at no cost and get access to Florida Funders VC-vetted investment opportunities in the next great breakout tech companies.